Hello and welcome to the Financial Future Guide. I'm your guy and I'm your guide. My name is Alex, and today we're looking at one of my favorite stocks that I would recommend as a core holding in your portfolio. Today's stock is part of the financial sector and is one of Canada's largest banks. Canada's banks are some of the strongest in the world, operating in very well regulated markets, making them a relatively safe play in the financial sector. Today we are deep diving into the Bank of Nova Scotia, commonly referred to as Scotiabank. This stock is dual listed, meaning it's found both on US and Canadian exchanges under ticker symbol BNS. If you're a Canadian investor, double check that you're purchasing BNS.to, as there are tax implications on dividends if you hold the US listing in a Canadian account. Before we get into it, if you want to purchase Canadian stocks and pay $0 in fees, click the link in the description below to open your account with Wealthsimple and get $10 free when you invest your first $100. BNS is the third largest Canadian bank by deposits and market capitalization. The company offers all types of banking services, serving individuals with day-to-day banking, including debit and credit cards, checking and savings account, investments and mortgages, loans and insurance, business and commercial banking, such as lending, deposit, cash management, finance solutions, and they're also involved in wealth management advice and solutions, including online brokerage, mobile investment, mutual funds, and exchange-traded funds. Bank of Nova Scotia is heavily focused on achieving a high degree of strategic diversification. Bank of Nova Scotia is the only bank with a significant presence in all major countries in the Americas: Canada, United States, Mexico, Peru, Chile, and Colombia. BNS has a highly balanced portfolio anchored in Canada with diverse exposure to US and in growth markets in Latin America. No single country outside of Canada represents more than 10% of the earnings. This differentiates BNS from many other competitors who are heavily weighted to the US. My last point for the business overview is I believe Bank of Nova Scotia is very well managed. Led by Mr. Brian Porter with 40 years of experience at Scotiabank, he's making the right decisions to position the bank to be very successful in the future. We will go into more detail regarding their future plans shortly. Having a look at the stock quote here, please note that this was filmed on Thursday the 6th of August 2020, so this may differ slightly from what you're looking at the moment. As I'm based in Canada, please note that we're looking at BNS.to, so all of these prices are in Canadian dollars. As we can see, BNS closed at 56.17. That's up 25 cents on the day, or 0.45%. Bank of Nova Scotia has a market cap of $68.042 billion, a PE ratio of 9.25 over the trailing 12 months, earnings per share of $6.07 Canadian over the last 12 months. Over the last year, the stock has traded anywhere between $46.38 to $76.75 Canadian, and they also have a juicy dividend of $3.60 Canadian, which currently equates to 6.44% dividend yield. Looking at the one-year chart, we can see Bank of Nova Scotia is currently 23.77% down from their February highs. And we can also see that over the past 20 years, Bank of Nova Scotia has had some relatively steady growth. What we're about to look at here is data found on Simply Wall Street. It's a great tool for all investors. I definitely recommend you check it out. Here we're looking at the current share price versus the fair value. The estimated fair value is based on the cash flows the company is expected to generate in the future. Simply Wall Street estimate the fair value of BNS is about $69.60, meaning the stock is currently 19.7% undervalued. I also like to look at the price to book ratio, which can also be found on Simply Wall Street. This is just looking at how the book value compares to the price of the stock. And if you're unaware, book value is essentially the value of an asset according to its balance sheet account balance. So this is the value of an asset based on the original cost minus any depreciation, amortization, or impairment costs that are made against the asset. So if we look over here at Bank of Nova Scotia's price to book ratio, we can see they're currently trading at 1. It's commonly understood that companies that are below 1 could be potentially viewed as undervalued, whereas those with a higher price to book ratio may be trading at a premium. In comparison to other banks, we can see that TD Bank trade at 1.2 price to book ratio and Royal Bank trades at 1.7. So Bank of Nova Scotia is definitely a better option on this metric. As you may know from my previous videos, I do enjoy that juicy dividend. I like the hoo-ha, give me the cash. So looking at Bank of Nova Scotia, we can see that they have been growing the dividend over the last 10 years. They previously were at $1.96 at a 4.2% dividend. They're currently at $3.60 at a 6.4% dividend. The growth in Bank of Nova Scotia's earnings have resulted in a dividend increase in 43 out of the last 45 years. This is one of the most consistent records for dividend growth among major Canadian corporations. So continuing our analysis, let's head over to the financial statements. We'll start with the income statement. We can see that total revenue has grown over the past 3 years. I would also just like to draw your attention to the trailing 12 months. As you know that we have been in this pandemic for a while, and since it begun, Bank of Nova Scotia has released 2 financial statements and they're still managing to grow revenues despite the hardships. This is a really good sign, and I'm very confident that Bank of Nova Scotia is doing everything they can to best weather this storm and able to do so while still growing revenues, which is actually quite impressive. Net income has been fairly consistent over the past 3 years. However, we did take a slight hit from the virus. We can also see earnings per share has also been fairly consistent too. Moving along to the balance sheet, we can see that total assets has increased over the last 4 years. A bank's assets can include things such as cash reserved, fixed assets such as land and buildings, securities such as government bonds, and also loans, as once these are issued, the business or individual who has received the loan will pay the bank in interest. Liabilities has also increased over the past 4 years. Liabilities can include things such as customer deposits. That is our money in the bank. We can withdraw it at any time. Money owed to bondholders, money owed to other banks, and the interest paid to those who leave money in the bank. Overall, I'm fairly happy with the financial statements, so we can move on to future plans. Bank of Nova Scotia is led by Aaron and Brian, out here looking like Batman and Robin on the front line of finance, looking like Ryan and Colin retired from comedy to focus on the big bucks. But in all seriousness, I do think very highly of the management team and are confident they can continue to build a strong and successful bank. Bank of Nova Scotia is investing in the improvement of processes that are creating cost efficiencies, modernizing their technology platforms, and enhancing their ability to release new features. These efforts will better protect the bank and enhance the customer experience. In today's digital era, it's so important that companies modernize their platforms that enhance the customer experience. If you've ever seen BMO's online banking, it's like looking at Internet Explorer on a Windows 98 computer. Absolutely filthy and not at all user-friendly. We love to see the continuous improvement in technology for BNS's business processes and customer interface. Although I mentioned Bank of Nova Scotia is very well diversified, they're also very focused on certain growth locations. Bank of Nova Scotia has been working since 2013 to get their portfolio down. From 54 countries to now 33 countries in 2019, they are limiting their country exposure and focused on growing the main markets that they're in. Bank of Nova Scotia has been able to capture market share in these 4 growing countries, being 5th in Mexico, 3rd in Peru, 3rd in Chile, and 6th in Colombia. The management team at Bank of Nova Scotia has identified these as key targets to continue pushing growth and moving forward with. Although I do see great value in diversification, I'm also well aware that the management team is making the best decisions to solidify certain markets and grow their market share within there. This is why I think the idea of focused growth is definitely great for the future of Bank of Nova Scotia. It is also great to see that Bank of Nova Scotia is technology driven. Tangerine Bank, operating as Tangerine, is a Canadian direct bank and subsidiary of Scotiabank. They offer no-fee checking and savings account, guaranteed investment certificates, mortgages, and mutual funds. As a digital bank being predominantly online, they do not have many traditional branches. This allows them to offer a higher interest rate than some of their other competitors. Tangerine has also created a sleek, forward-looking banking app that allows their customers to view account balances, make transactions, make transfers, and deposit checks just by taking a picture. It was discussed in Bank of Nova Scotia's latest financial report that digital retail sales and digital adoption has been growing over the past 4 years. It is also key to know that in-branch financial transactions have fallen dramatically over the past 4 years, which tells us that consumers are generally moving to digital and online banking. And as Bank of Nova Scotia is one of the only major banks moving into this digital age, they are well ahead of the 8 ball. My closing thoughts on Bank of Nova Scotia is they're a front runner for technology among major Canadian banks, which I love to see. They're well diversified globally, and they have a great dividend. At the current prices, I give Bank of Nova Scotia a big fat buy, and when comparing to some of the other banks available in Canada, I think this is the most undervalued currently in the market. Bank of Nova Scotia is a core holding in my portfolio, and I will be continuing to grow it. If you made it to this point in the video, you're definitely an avid saver and investor. Did you know that if your interest rate for your savings account isn't higher than the inflation rate in your country, you are losing money every minute you keep your cash there? I created a video explaining this concept and shared the best financial tip I've ever received that'll help you boost and protect your hard-earned savings. Click the video on the screen now so you too are able to implement this simple and effective strategy. Alright, so that's going to be all for today. Remember to like, comment, subscribe, and to see videos similar to this one. See you next time.